Can your incident response technology collect from off-network endpoints? Xterra FTK Enterprise can. Endpoints are no longer located in a physical office, and organizations need a comprehensive investigation tool that enables holistic data collection and review. With FTK Enterprise, you can also scan for IOCs and MISP indicators. You can scan with Yara rules, and you can use integrations to trigger automatic endpoint collections. Visit securityweekly.com/Xterra for access to their white paper, Incident Response for a Remote World.
Attackers are only getting more proficient, so how can you proactively adapt your cybersecurity strategy? Core Security by Help Systems helps you uncover and prioritize the risks that pose the biggest threat to your organization. Core Impact is a penetration testing tool that safely finds and exploits vulnerabilities using the same techniques as attackers. You can conduct advanced pen tests with ease using certified exploits and automations. Take your engagements to the next level by pairing with Cobalt Strike, a threat emulation tool ideal for adversary simulations and red team operations. Learn more at securityweekly.com/core security.
Deepwatch helps secure the digital economy by protecting and defending enterprise networks everywhere, every day. Deepwatch leverages its highly automated cloud-based SOC platform backed by a world-class team of experts who monitor, detect, and respond to threats on customers' digital assets 24/7, 365. Many of the world's leading brands rely on Deepwatch's managed detection and response. Visit securityweekly.com/Deepwatch to learn more. Welcome back to Enterprise Security Weekly. Do you have a specific guest or topic that we never talk about and you want us to talk about? You can submit suggestions to us. Go to securityweekly.com/guests and complete the form there. We review these suggestions monthly and we'll reach out to you once reviewed. Join us on June 29th for a webcast with Tyler Robinson and Bo Bullock to learn how to pivot into the world of crypto security. Always a blast to, I don't know Bo, but I know Tyler, and we've had a lot of good conversations on crypto. So if you're interested in that, absolutely check out that webcast. You only need your name and email to register. And don't forget to check out our library of on-demand webcasts and technical trainings at securityweekly.com/on-demand. And now for the Enterprise Security Weekly News. You can check out securityweekly.com/ESW 276 if you want to follow along as we go through the different news items. Tyler, were you trying to say something?
Nope, I didn't have anything really to bring up today. Just saying hello.
Don't do that to me. Oh my goodness.
This is the way I'm going to do it right now. I can't do it and talk in the mic at the same. I can't do it and talk in the mic at the same time. But this is the way I'm going to do the rest of this segment.
Yeah, there's a definite visual gag here. If you're listening to an audio only version of this.
Oh yeah.
I'll leave it.
I forgot we do audio podcasts too. That was kind of stupid, but hey.
No. It's I think it's fun because maybe somebody checked out your first couple minutes of the news segment just to see what we're doing, what silly stuff
Absolutely.
we're doing. Yeah. So where I want to start out is actually not with one of the stories, but to you, Tyler and Katie, because you're both in the marketing side of things. This is our first RSA, our first conference season back from the pandemic. So not just RSA. I mean, we're so back that we've got two major conferences going on in the same week, and everybody is sort of fine with it. So, what kind of stuff are we going to see over the next couple of weeks? Black Hat, RSA, Gartner's conference. We've got pretty much one of everything happening over the next 6 weeks here. Are we going to see a ton of new announcements here, new products? What should we be looking out for?
Absolutely, 100%. You're going to see a flood of announcements, a flood of fundings, a flood of fundings that have maybe closed in the last 6 months get announced. You'll see announcements around new product lines, new feature sets, new partnerships. All sorts of things will be coming out now. What's interesting is, as a vendor in creating and actually trying to support these different events, there's really only going to be a couple of them that knock it out of the park, because it works better when they're spread out throughout the year. People don't want to do 5 boondoggles in 6 weeks, right? They just don't want to. So there's no way that we're going to see all of these 5, 6 events, whatever it is, in these 6 weeks hit their expected numbers. I think RSA we'll see do very, very well because it's the big one. It's the premier one. It's the one that everybody's going to want to go to. I think on the other end of that bookend, Black Hat in August is still far enough apart from RSA that you might get a 1-2 punch of people going to both boondoggles this summer. But I think you'll see things like Cisco Conf and Splunk Conf, which are both in the second week of June, have lower turnouts than normal. I think you'll see Gartner's event will be lower turnout because it's over the top of RSA. And there's just too much. It's just too packed in. And, even as vendors, we can't even do them all, right? Because I can't put 2 booths in 2 different locations when I only own one physical 20 by 20 booth. So, I think in a general sense, you'll see some of them do well, some of them fall flat as we kind of get through this rush of unlocking that's occurring in the summer. And then hopefully the second half of this year into Q4, we'll start to see them stretch back out into a normal pace next year. Katie, do you have any thoughts?
Well, I agree with everything you said, but 2 things to add on to that. I think there's going to be, on the one hand, we're going to see incredible creativity or stretching the limits of creativity at certain booths, especially the larger booths at RSA, what companies want to do, making the biggest splash they can. Some of them will be huge and amazing. Some of them will be huge and will fall flat. But I think there's going to be incredible innovation because there's been bottled up anticipation. On the other hand, companies are going to try to get the most coverage they can because they've been so thirsty. The salespeople in particular have been so thirsty for in-person events that these companies aren't going to have enough bandwidth to do all of the creative things that they want, even if it's something simple like not having the actual physical booth to do it. Exactly. They're not going to have some of the bandwidth, the money, the staff, the whatever to do what they want to do. So there might be some streamlining or continuity or duplication between their events. And so it'll be interesting to see what happens there. This summer is going to be jam-packed. I think people are genuinely excited to get back to events. But I think once we're past this summer, there are going to be a lot of people who are going to say, all right, we did that. We hit this really, really hard first time since 2019 or very, very, very beginning of 2020. I kind of like not going to an event every 3 to 4 weeks. So I think the summer is going to be nuts. I think people are going to be all excited, but I think we're going to see an industry shift a little bit in 2H and beyond because people will be excited and then they'll realize, it was kind of nice to be home. It was kind of nice to have my routine. Hey, we've figured out ways to do virtual events. Let's do more mixing and matching between in-person and virtual than, those every other week trips to here and there and everywhere. Unless you're a diehard salesperson. I think that those folks will probably still enjoy the consistent travel. But I think there will be a lot of people who are like, I need to get back to my desk a little bit more, and I want to get back to my daily routine a little bit more.
And speaking of having a lot to unpack, congratulations are in order because JupiterOne is, as of today's announcement, a cybersecurity unicorn. So congratulations, Tyler.
Thank you. We've been at it for a while now. The growth rate's astronomical. We feel like we're in a very good place, and we took the money in, and we're going to apply it to continuing to grow the company at a nice, healthy, maintainable clip for the business over the next handful of years as we continue to get successful with JupiterOne. So we're really excited. Today was a big day for us.
The reason you're a CMO is because of the inserting of the word astronomical while talking about your funding and
yes. Yes, that's exactly why I'm.
Yeah, no,
and
this is great. I think it's great for you. I think it's great for the industry. Talk a little bit about, why these investors, what are some of the things you're going to do? I know it's listed a little bit in the press release, but talk about the planned growth here, because it's really exciting.
Yeah, no, we had follow on from our current investors. Our new lead is Tribe Capital, Sri Pangular from Tribe Capital, who is a phenomenal partner for us. For those that don't have the visual feed, there is a unicorn with my face that has been photoshopped onto it on the screen now. So we have 3 Tyler faces on the screen right now, which is kind of scary. Sri and the team at Tribe led the round. We also announced additional investment from Intel Capital, among other players, and so we are going to continue to grow this company in the nice, healthy way that we're doing it. Right, we're seeing fantastic growth quarter over quarter, year over year, and we'll continue to achieve that growth. But we're not going to get ourselves too far out over our skis. We're not going to get ourselves into overhiring, overgrowth, like we see a lot of overfunded unicorns in the last couple of years. And so, yeah, we're excited to apply this at both GTM, go to market growth, as well as product speed growth and velocity of development and innovation.
This gets us off JupiterOne a little bit, but it's interesting. It's a 70 million Series C, which is obviously a good amount, but very modest compared to what we've been seeing. And, some are going to say, wait, you could have gotten more. Why didn't you get more? And then there are others who, and I'm in this camp, who are saying, good for you. Don't take more than you need. Grow modestly. Use what you need to grow, but don't outprice yourself, whether you go IPO, whether you go acquisition, because we are seeing a little bit of a shift, I think, in the market. The M&A markets right now are all topsy-turvy, sign of things to come. But I think it was smart, but there'll be some who say, what? You could have gotten 170 million Series C. Sure.
That's exactly why I'm using the healthy term in the statements that I'm using, right? At the end of the day, it's about building this business to last and building this business to continue to grow in a nice, predictable, healthy manner. And we feel like we're going to achieve that this year. We're going to achieve, very significant growth this year, both in headcount and in revenue. And I think by the end of the year, we'll feel like we're in a really good place. And yeah, it's just about taking the right amount at the right time, at the right valuation, and then creating a business model that demonstrates that you can track the business to, cash flow positive in the appropriate amount of time, but grow the business while maximizing that growth without putting yourself in danger or at risk as a business. And that's for every company. This isn't just JupiterOne commentary, right? This is for every company that's raising money now. Raise the amount that lets you grow to your maximum speed without putting your business at risk in doing so. And I think that's great advice in today's macroeconomic VC and investment economy.
Yeah, I think, it's a good example for companies, because we've seen these insane rounds, we've seen these insane valuations, and we're starting to see the signs that this is going to come back to haunt a lot of companies. And we've already seen it in the past couple of weeks, again, getting us a little off topic here, but a couple of key companies with some major layoffs, and they were following really big raises. And so it's a warning sign, I think, personally, to be very mindful of what you're doing and not just take everything you possibly can. It's not necessarily, you don't get the gold star for raising the most money. You get the gold star for having the best company, the best product, or if this is your goal, to get acquired for a really respectable amount that puts money in your pocket and your employees' pockets, by the way, or the same with IPO. I don't think you get a gold star for saying, hey, we raised the most.
Yeah, I haven't been on the show for the last few weeks. I've been out recovering. But when I look at what has been happening in the last few weeks, I'm sure you guys even discussed it on the show, but some of these companies, some of these massive high-tech companies taking 50 to 60 to 70% valuation write-downs and markdowns, 40 something million down to 20 million, or 40 billion down to 20 billion valuation, right? And then having to reprice everything. Yeah, it's just not a good place. You don't want to be in that place of overfunding and then saying, "Oh my gosh, it's going to take us 25 years of growth to ever get to this valuation," right? And that's always the tricky thing when raising money. It's about matching the raise amount with the valuation amount, with the ability to grow and grow at the maximum capacity without adding too much risk.
Yeah, and they were saying, Katie, on that clip that you shared in the ESW channel, and they've been saying it on the All In podcast as well, that looking at using public SaaS company comps, the multiples are effectively, I think the average is 5.6 times revenue, and like the top 30 most exceptional SaaS businesses are doing 8.5x. Right. So nothing near like the 20 to 100x that you see some valuations leaning.
What
on.
I will tell you though, Adrian, is it's a balance. That valuation is a balance against revenue plus using growth percentage as some kind of multiplier to get to that valuation. Most of those public comps are growing in the 20, 30, 40% range. So you see the squish down that occurred because they were being valued as a 200% year over year grower. And it just didn't make any logical sense. When you get down and you take those comps down into the VC investment world, it is a little bit different. I wouldn't expect a comp to be around 5x forward looking. More reasonable is somewhere in the 15 to 30x forward looking, but it's all dependent on the growth percentage year over year. If you're growing 300% year over year for 3 years straight and you're sitting on 20 or 30 million in ARR, you're going to have a much higher valuation than if you're only growing 10%, right? So there's a lot of variables that go into that multiple. But, I think for most of the early stage VC style investable companies, the earlier you get, the higher that multiple is going to be. The later, the closer you are to a direct comp to public.
Yeah. Yeah, no, I love the early stage. They're like, we had 1,000% growth. Yeah, like, what was your revenue last year? 30 grand.
Yeah, 30 grand, exactly.
It happens. Yeah. It's very exciting. Sure. It makes for a great press release, but yeah, of course, at the early stages, you're going to go from 0 to 60 or 0 to 3,000 really quickly. But once you start getting up into those higher revenue levels, you can't expect the same growth anyway. So the longer you've been around, and you would think the longer you've been around, the later the funding you're raising, the C's, D's, E's, and, some companies may do more than that. Obviously, the revenue is going to be higher. It gets a little harder if you've been around 8 years or 10 years or 20 years to say, hey, I'm going to grow 3,000% unless you do something absolutely crazy. But I can't think right now of any examples of that happening without a serious merger.
Yeah, so I can't, so moving on to the funding announcements here, last week we only had 5 and they were tiny, like we barely had 50 million in funding to talk about last week. And I was wondering, like, I didn't think we'd be seeing the impact of any market downturns at that point in funding. And I suggested that maybe it's because everybody's holding out to release their announcement within a week of RSA. And sure enough, we've got 16 announcements here today. So it's
historically, it's RSA has been the funding announcement, and Black Hat has been the product announcement venue. So this makes sense, and in an attempt to differentiate these two massive conferences, which are a couple of weeks apart, I would think that this makes sense to try to get the money out and then all the big product hoopla out in August.
Yeah, and I don't think you'd want to announce the week of. Most folks I've talked to aim to announce the week before, because week of, everybody's so busy, nobody's going to see it.
Adrian, there's a game there. There's a game there, right? Like some people will announce Tuesday of RSA and try to catch in the moment press. Most people, like we obviously just did at JupiterOne, we announced the Thursday before the event. And I think you see a lot coming out the week before. And some people even try to scoop you. You might have seen some Tuesday, Wednesday this week trying to scoop the Thursday teams like us. So It's just a game everybody plays.
Yep.
Yeah, don't do it next week. I had this conversation with somebody. You're going to get so buried in the, hey, remember we have this event, and hey, you're signed up to go to this talk, and don't forget our keynotes. I think it's a bad idea to put out any big announcements next week. Just my opinion.
Yep. Devo is another big one. Announced a $100 million funding round. That is a Series F with a valuation of $2 billion. Also making Devo a cybersecurity unicorn. And not a terribly surprising one. Devo's seems like they've been growing quite a bit. Getting up there is a big, I don't know, maybe a Sumo Logic and Splunk competitor. I think that's really where they've
definitely positioning as a Splunk competitor and a Splunk disruptor. 100 on 2 billion is very healthy raise amount and valuation size. I do have some inside baseball in general about their revenue rates, and it does support those levels of valuations because they are growing like crazy.
And they really, they're a different type of company than a Splunk. They compete on, the indexing issues, which they don't have, which make them faster. That's their claim, and the cost. And Splunk is a fantastic tool. It's great, and they are entrenched, but it's not cheap to run. So here comes along a cloud-native company doing similar types of things for less. So you're going to get those companies who are either just starting up their own SIEM or, want to take things in-house. I think migration could probably be a massive nightmare, but I'm sure they're winning some of those deals too, and just toughing it out until, until the actual migration happens, which is never going to be a snap of your fingers when you're dealing with something as big and complex as SIEM. But, good company. Talked to them a couple of years ago and was really impressed. So kudos to them too.
Yeah, and I think some of the trend we're seeing here is, Devo's easier to use too. I must admit, I'm not sure I understand why Splunk architecture gets quite so crazy. Like there were SaaS services back when Splunk came out in the mid 2000s, and like the writing's been on the wall for a while. And then, when Sumo Logic came out, they actually have a free tier that I use. And it's just stupid simple to get stuff up and running in there. And you can run something simple with Splunk, but once you start scaling up, like the architecture just seems more complex than it needs to be. And it's I think they do have a SaaS offering now, but it's feature parity isn't exactly there. So yeah, it's an interesting space because it's I don't know what the margins are like, but it's almost commoditized at this point. Would you guys agree?
Yeah,
the people
definitely
that
not wrong.
The data, manage the data, report the data.
I mean, think about what they do. They pull in event information, incident information, indicators compromise, all that stuff into a single platform and allow you to look at it, connect it, inventory it, query it, right? All of the things that are happening in real time. And there's a lot of value when you think about the analysis of that data and looking at that data in real time. And they were the first to do it, and they were the most powerful, and that's why they've become what they've become. And I think Devo's taken a cut and trying to steal that away from them with some innovative technologies.
Yeah. I'm not terribly familiar with, this is my number one story, $200 million funding round led by KKR, which I believe is a PE firm. We've seen do some acquisitions and stuff like that as well in the security space. Not too familiar with Certs. It's apparently an identity vendor, but I don't think this is a VC round, or not a typical VC round.
KKR is private equity.
Yeah.
Yeah, I don't know much about Certs, but I do know that kind of that identity-driven cybersecurity play is to me is one area I'm very, very interested in. from a futures perspective, because one of the things that are consistent when we're talking about more modern security models and infrastructures is that you can't do anything without authentication authorization of an identity or a token to make it occur, right? And that's across every service, every product, everything that you do. And if you can track and analyze those pieces of data, you have a very good vantage point into the operational security of what's happening in your environment. And so I do like some of these more modern identity-based cybersecurity, identity threat detection kind of plays. And, with a very brief, and I don't know what Semperis does, I'm not up to speed on them in particular, but just doing a very brief glance at their website, they are using similar terms like identity threat detection, things like that I think are just a really great futuristic market. And so I'm not surprised that they're starting to get, big adoption investments and things like that.
So let me hit you with the tagline on their website, or not tagline, but the short version of what they do. Semperis provides the only 100% automated, AD-aware forest recovery and management technology.
Sounds a little niche to me. If you're just taking that, it sounds very niche of AD-centric.
Maybe a ransomware situation or something like that. I can see it for that. Yeah. I mean, if your AD forest needs recovery, you really need that recovery. I know that.
You'll pay anything for that.
You'll pay anything for that. Absolutely. 100%. Let's see. Going down the list here.
Can I bring up a real quick trend, Adrian?
Yeah.
And just scanning through the links, I've noticed a pretty consistent A round size. I don't know if you've seen that. This kind of new 20, 30, 15 to 30 A round seems to be pretty
coming
consistent.
Down a little bit.
So this next one on the list is 50. This is
50A?
Number 4 is ChainGuard, which is going after secure software supply chain. That's a 50 million Series A.
Well, this one caught my eyes for something totally different. This one caught my eyes because the music band Chainsmokers is invested.
That's a music band? I noticed that.
You don't know who the Chainsmokers are? Come on, man.
What?
Wait a minute. Isn't Apollo Ono one of the investors in the company that just led you around?
Led my round?
Yeah.
No, not that I'm aware of. I've never been told that. No.
But
the Chainsmokers.
I can't remember. I saw that recently. Apollo Ono is an investor now. He was
not
cool.
affiliate.
Maybe not as cool as Chainsmokers. I don't know.
Chainsmokers is cool as hell. So I want Chainsmokers to invest in my company so that I can get them to DJ my parties in Vegas when I do big parties.
I am not familiar. So this is a DJ duo, and I am not familiar with them. And their Wikipedia page does not list their investments. So a little disappointed in that.
Yeah, no, they're definitely the investor because it's the Chainsmokers Mantis VC. Unless it's somebody else who's stealing their name, which I guess is possible.
I don't know. They're listed as in 2017, listed as third on Forbes' world's highest paid. Forbes has a world's highest paid DJs list. First of all, this is a list that Forbes maintains from year to year, and they were third on the list with earnings of 38 million. So they certainly have the money to invest.
Well, doing a little bit of a quick Google foo, at September 15th of 2020, the Chainsmokers closed their debut venture fund, the Mantis VC Fund, with $35 million in their first fund. So yes, the Chainsmokers are investors. They are the world's highest paid DJs, and they got a piece of this company that we're talking about right now.
Wow. Yeah, and that's and some of the names pinned under there. You got Kathy Wang, who's the CISO at Discord. You've got Nipun Gupta, who's over at Devo, who we were just talking about. Taylor Lehman's over at Google. Omkar also over at Google. Yeah, kind of a who's who on the individual investors. angel investor list here.
Yeah, plus ChainGuard also did their release as an article, blog style, which I just love. It's just such a good way of putting it out.
Also, they mention like it's a huge round. It's a $50 million round, and it's almost an afterthought. It's at the very end of the article, which I also like. You don't start out, because almost every other press release you read, the very last article in ChainGuard's post here is usually the first one. First thing you hear is the size of the round, who the lead investor, like all that stuff, all the financial stuff is first. And you're lucky if you can figure out what the company does going through the rest of the press release. But in this case, it's the exact opposite, which I like.
It's a hot area, though. The supply chain, software supply chain security is a very, very booming area. There's a number of companies getting invested in this spot, kind of pressing that SBOM, software bill of materials, forward, finding ways to secure the chain all the way from creation up through use. It's going to be neat to see how this disrupts potentially the traditional application security testing market. You know, the likes of Veracode and WhiteSource, and or actually, I don't even know if you guys caught that last week. They changed WhiteSource changed their company's name to Mend, which was a big thing. But yeah, that whole AST space is being disrupted by this kind of new software supply chain approach.
And it's interesting. One of the things they're doing is something that Docker had their registry. A lot of the I think AWS also has a container registry. So it looks like they're providing base container images as well that aim for zero known vulnerabilities. So ChainGuard images can actually, I guess it's just going to be one of their products is ChainGuard images. Whereas they also have ChainGuard Enforce, which is more the vulnerability visibility piece of it, vulnerability management and visibility. So yeah, ChainGuard images is basically like a container registry that you can use to check out the base images that you use, and then apply whatever you need to those images. Use that to.
But none
to
of that is different than what's already being done at Sonatype and other kind of repository-based security companies. Trying to think of the other. JFrog, right? They're already doing all that kind of stuff. So I'm not sure what the delta is here.
I don't think they provide the actual images, though, do they?
Well, I know Sonatype a few years back was doing security of like if you download images, Docker images and things like that, you can actually store them in a repository, auto scan them, look for software security issues within the images before you push into your Kubernetes cluster and push to production. So I'm sure that has come more forward since I was last intimate with Sonatype a few years back. But my point is all that stuff's already being done. So it's going to be neat to see if these guys can do something truly innovative and disrupt the Sonatypes of the world.
I mean, the hype level is definitely there for it. I forget, it was somewhat notable who the founders were. I can't recall who they are right now, but yeah, I remember that creating a lot of excitement around this company as well. So yeah, eager to see how that goes. All right, let's see. I might skip some of these other. So much fundraising. I think there's a couple interesting, notable ones in here. So number 8 is not a startup funding round. It's a funding round for basically throwing some money at open source projects to improve the security of those open source projects. And it's several large vendors that are pitching in on this. Amazon, Google, Microsoft have committed to this project. The Linux Foundation, Open Source Security Foundation, and so the project looks like they aim to raise $150 million total, and this is just the initial funding. This is $30 million.
Wow. All for open source security. That's another thing I noticed too in when I was scanning this week's list of stories is there's actually a number of open source discussion, open source products, open source offerings like this one, companies like Tidelift that are doing open source related security. There's a lot of open source and software supply chain stuff being funded right now across the board.
Yeah,
it's fundamental. Somebody needs to be looking out for it, and open source doesn't just mean free. To certain people, open source just means free, but it's not. And if you don't have anybody looking after it and maintaining it and improving it and going back to it, then we've all seen the problems. So much software. Actually, at the beginning of this article, it says about 97% of software relies on open source software. You can't just ignore it just because it's freely available. Somebody's got to be taking care of it. So kudos to those companies for investing in it. 30 million won't go a huge way considering how much open source software is out there. But if this is just the first round of, 4, 5, 6, good. It will definitely help the supply chain and software security.
I think it can go a long way because, if all that's going directly to providing tooling or support, for open source project maintainers, that goes a lot further than 30 million, to a startup, where a big chunk of that's going to go to sales and marketing, right?
Well, sure. This is for people's time. There's probably not a whole lot of new tools procurement going on, and yeah, they don't need sales and marketing support. They don't need office space. They don't need all of that. But this will add up given how much open source is out there.
Yeah. And then the other interesting one here was my article number 14, which is Forge Point Capital, which is a dedicated VC. They only do early stage cybersecurity investments. And it is a 10 million Series A, but what makes it notable is they also incubated this company, which is something that we've seen like YL Ventures, a few of the other early stage VCs do. And it's always interesting, rather than trying to find somebody who's already started it. A lot of these VCs pour a lot of time and effort into, what they want to fund, so why not, piece it together? I'm kind of curious, Tyler, if you have any opinion on a VC going out and finding founders that have already started a thing versus finding founders and saying, hey, we need somebody to build this in this category. Will you do it?
Yeah, I think it's a really interesting question. It used to be a few years ago, if you got in, let's just call it B+, B and later in cyber, you were pretty much guaranteed a return, right? You got in B or later, it was getting bought. It already had product market fit. You were pretty much returned. It got hyper competitive in those stages because the return was a lower risk investment, right? And so it got hyper competitive. And where was the room to go, right? The valuation started skyrocketing in the later rounds, and people said, well, where do I go? Well, you went earlier and earlier. So you started doing Bs, then you started doing As, then you started doing seed. And really, you're just seeing kind of the follow through of taking that to, hey, what if I just start to invest in people that might be the type of people that might be able to build a cyber company? And I think we're getting to the point where that is even becoming saturated, right? With the Y Combinators and the YL Ventures and these guys now. There's a number of them that do this. Another thing that they do is scouting programs, right? So they've got people like me out there scouting and bringing deals to them. So they've really, a lot of these mid-stage VCs have pushed earlier and earlier. Now that's getting competitive and hyper competitive. And so they're doing this kind of seed the ground, right? Put seeds in the ground and hope they grow super early kind of model. I'm not sure it's going to pay off. And the reason why is that is so high risk. Like the risk of actually getting any kind of return on any of those investments is very, very low. But if you hit one and it does real well, you're in so freaking early that you're going to make a killing, right? So that's the risk reward model is definitely there. But the flip side of that coin is, does it make sense for the company? Does it make sense for the people that are building the company to give away so much equity so early? That's also something that I'm not completely convinced on here.
There's another factor that might shift your thinking a little bit. Both the companies that, well, maybe we'll see, but both the companies that ForgePoint Capital has incubated now are services companies, which is
that's very interesting. I didn't know that.
Bakes my noodle a bit. Like, that's not what I would expect to see a VC incubating something to choose. The first one, Soul Cyber, was an MSSP for the mid market, and then this one, Surefire, is an incident response company.
Wow. Yeah, no, that's super interesting. I did not realize that. I mean, obviously return on them, maybe because they feel that they're going to have a better chance of building a business because it's lower risk in the sense that it's services based, but they do it earlier, lower the risk and get a mid-sized return out of it. Seems like a reasonable model.
Well, lower risk, lower overhead. Also, if we're talking about, the cybersecurity understaffing issue, and I know we're going to get into this later, it's not that there aren't going to be enough people there necessarily. It's going to be that the model shifts even more significantly than it has. It's not just going to be those SMBs who are using outsourced services. We know that enterprises also rely on outsourced services. They just also have a big team internally. And so the model, the economies of scale with a services company are going to fit that niche. And especially as security grows even more, there's going to be even greater need for these types of third-party companies who are partnering with all types of companies up and down from SMB to enterprise.
Yeah, interesting stuff. So yeah, eager to see what happened with both of those. Certainly we've seen the idea of services being like a 2x investment, or a 2x return type of company, kind of flipped on its head with like Arctic Wolf, Cyber Unicorn. Mandiant had a very nice exit. Of course, none of these companies do have software as well, proprietary software that they're building, but still at their core, services companies. So, I don't know, maybe, and
Bishop
with the market saying if a SaaS vendor is now a 5.x company and Arctic Wolf is an 8x company, like, what the hell is happening?
Yeah, no, Bishop Fox is another good example. I was reading through the ForgePoint stuff. They were invested in Bishop Fox. Bishop Fox started to create their own, I think they're calling it CAST, cloud application security testing product. It started to get some traction.
Yeah.
And they did an investment there. And yeah, I think you're right. Even if they keep the non-ARR revenue on the books and give them a smaller multiplier on it, if SaaS compresses that far, does it bring the concept of investing into services back into play?
Yeah. All right, let's move on real quick here. Just a short note that the Mimecast, I think we talked about this last December. Mimecast, I assume a PE firm called Permira, was taken in private for $5.8 billion. So that's happened. They're delisted on the NASDAQ. They are now private.
Yeah, here's my prediction, Adrian, for the rest of this year and into next year. Massive M&As. You're going to see fundings stay small in a quantity perspective and massive M&As this year and next year.
Buyer's market?
Yep, absolutely.
Yeah. And speaking of buyer's markets, ReliaQuest picks up Digital Shadows for $160 million.
Small deal, $160 million all cash deal, I believe it was. Yeah, that's an interesting deal. I think the founders were just done with it. It wasn't growing maybe as fast as they had hoped at this point, and just wanted out of it and go on to their next thing. Because I know it wasn't. I don't know exactly what they took in from an investment standpoint, but it was not a huge multiple on total cash invested.
58.
Yeah.
Yeah. So a bit surprising to some people there. I think Digital Shadows had a great marketing game. but ultimately the product was fairly niche and small. It's the last time I tested it out last year, and honestly, it was the same with me. I thought the product was much broader than what it was, and yeah, it's basically data loss detection. Is kind of the core of it. They're calling it digital risk management, I think, which is kind of the same category as Risk IQ, who's kind of moving into the attack surface management category when they get acquired by Microsoft. But yeah, for the most part, they'll tell you if your employees' credentials are, kind of like a "Have I been pwned" or something like that. If any of your data or credentials have been exposed.
Yeah, just by the description alone, it sounds like it needs to be a piece of something bigger.
And it is in other companies. So if you look at Flashpoint, if you look at Recorded Future, if you look at a lot of the other threat intel companies that have turned into kind of roll-ups, this is just one, of many features of their platforms. Yeah. All right. Let's see. So we talked about the market already. So my trends 20 and 21 are both related. 21, I think, Tyler, Katie, you might find interesting. It's basically pulling live data from the public markets from cybersecurity related public companies, and they're doing some analysis on current price versus 52-week high and low, and it's what you'd expect if you read any of this stuff. But yeah, interesting spreadsheet to peruse if you want to.
The key thing I like about this, Adrian, is the brands that they've put in it. Right? They didn't muck it up by calling Microsoft or Google a cyber company and jamming some goofy thing like that in there. This brand list is really good.
Yeah. Yep. And so there's number 20 is the actual post. Number 21 is the data behind it. Let's see, other trends here. Trellix, which used to be McAfee. And since we're mentioning that Trellix used to be McAfee, there was also a rebrand that I missed, I think, from a couple months ago, where the SSE business, which used to be SASE, now it's I'm having keeping all the acronyms, but they went back and used an old acquisitions brand, Sky High Security, to their SSE business. So they're wanting to ditch McAfee altogether, get rid of it altogether.
Can you blame them? Can you blame them?
No, it was a good opportunity too. I think when John McAfee, kind of popped back into the media limelight, like that was not a great thing for their branding, for their image.
No.
So, yeah.
No, I can't blame them at all. But it's, what is catching my eye about some of these rebrands though is, this Trellix and going back to Sky High, and I'm not exactly sure what the benefit out of some of them are. Like dumping McAfee, I get, right? That makes total sense. But and I actually, have a little bit of investment in this one. But why would White Source change their name to Mend? Like White Source has a ton of brand equity and it's all positive. So I'm not sure exactly why companies do that.
The same reason that we don't use the term whitelist anniemore. We say allow list.
Yes.
Could be.
Yeah. Yeah. So whitelist, blacklist, black is bad, white is good, those kinds of implications that, have really kind of turned people off of using terms that.
I hear you, but that's got to be a tough decision for that business, because 10 years of built up brand equity in the AppSec space is now poofed, and they're now called Mend.
And how like SSO is a tough game when your name is Mend or redacted or no name.
Yep.
I don't know. Even redacted no name are a bit easier than something like Mend. Like there's a company called Circle, that made this proxy you'd put on your home network, and you could use it for parental controls. Like, I could give my kids 30 minutes of internet time, and then it would just cut them off, and they'd have to go do chores. And once they did the chore, they got more time, and it was impossible to find them. If you tried to look up Circle, They wouldn't even be on the first page of results. So it was a complete mess. So I agree. It's brands are tough already, but I would rather you just go with some pronounced nonsense name than something that's clever and hard to remember or find.
Absolutely.
So speaking of Trellix, the trend there was they did a survey of 1,000 cybersecurity professionals, which is a decent sample for doing a study. I've done a lot of studies in my past. I don't think I've ever done one with 1,000 or more people. All mine have been under that, and found that 30% are planning to change professions outside of cybersecurity within 2 or more years. Which is interesting, which leads to a whole bunch of questions. Surveys are hard. Data's anecdotal. There are all kinds of, issues with surveys in general. But still, I think this is somewhat notable. Anecdotally, we hear about people leaving this industry. And I wonder what percentage of those 30% are just entering, because we know a lot of people entering aren't doing, like bottom level SOC analyst job, is not something that makes you want to stick around for life in this industry. Right. So I wonder how many of them are just retiring, so that's something that the survey didn't really control for, I don't know how many of these 30% are just hitting 65 or, earlier and retire early or something like that.
Yeah,
so
there are a lot of open questions. A sample size, like you said, 1,000 people, that's great, but where are they in their careers in terms of their tenure? What industries are they in? Are we talking about enterprise security practitioners? Are we talking about vendors? They're very loose with the term security practitioners. So are we talking about strict security roles, or are we talking about people who work at security companies who may be in sales or marketing or what have you? For me, this opened more questions than it answered. And I think this is a little bit of a clickbait headline. I hate to say it, but it seems to me like this was meant to get people to click on it. And there's some competing data in this report versus the other report that's on the list. The other survey said, people find security fulfilling. And in this one here, it said that that people didn't feel much support. It says, as for cybersecurity workers themselves, those who plan on leaving the profession are doing so because they feel underappreciated and unable to grow in their roles. They lack a clear career path, a lack of social recognition, and a limited support to develop their skills. So it's almost contradicting the other report, the previous Trellix report, about.
So they're both the same. So a quick point here. So number 23, the ZDNet article is an article about the Trellix report that comes right.
But some of the data in there, but that gets to your point where, surveys are hard. You can interpret data in a number of ways. And I think some of it verges on contradicting itself. Not that these are put out by the same people, because they're not, but it does make you look at these types of reports and scratch your head a little bit when you can find those discrepancies in, quote, data about the same data, right? So that report, the ZDNet report, was all bad news, but in this original report, it says 92% of cybersecurity professionals agree that cybersecurity is purposeful, soulful work that motivates them. That's in complete contrast to what I just read verbatim from the ZDNet report, claiming to be citing it. Now, I haven't gone in and checked those citations, but ZDNet is certainly a reputable publication, so I'm sure they're not, making data up.
Yeah,
So
no,
that's definitely something you have to keep in mind when, it sort of gets to the idea that a larger philosophical crisis that we have in society with misinformation and disinformation, right? Which one do you read and which one do you believe?
they know it's going to get more clicks, so they're gonna pick and choose from that survey. Absolutely.
Exactly.
Which anytime I see an article like the ZDNet one, like the whole reason that the original survey blog post is in here is immediately when I read that, I'm like, okay, first of all, let's see if the journalist misinterpreted the survey results, because it's very easy to do based on, and sometimes the survey questions, if they're not put together well, like you'll get misleading answers to those questions in the survey. So immediately I have to go to the survey, and it's a decent blog post. Like, it's not raw data from the survey results, but it shows you the exact wording of the questions, which is really important to have when doing any kind of analysis on a survey.
Right. You definitely have to look at the survey design. I worked at a company for a very short time that wasn't in cybersecurity, and I thought I was okay at writing questions. And then I worked with someone who was a master at it, and just tiny little word tweaks influence outcomes exponentially.
Mm-hmm.
Yeah, it's crazy. But I think, life lesson, not just in security, it's, have a critical eye to what you're reading, because right here we have two examples of reading, quote, about the same thing, end quote, and you're getting two almost opposite perspectives on a few data points. So it's really important to read both of them and use your own analytical skills.
100%, which is why I wanted to get that original blog post in there. They did a good job with that, where it's not, they present the data, you can come to your own conclusions, but didn't try to wrap too much of their own opinions around it. Let's hit the squirrel stories before we close up here. First one here is great. It's a tweet. I don't know Joey Piccola, but he said, I never thought I'd say this, but my window blinds won't open because of an expired certificate. Welcome to the future, folks.
Oh my gosh, that's so funny. My washer and dryer just broke, and I had to order a new washer and dryer. And I actually sprung for the one that is internet connected and alerts my phone when the cycles are done and all that stuff. And now I'm like, oh God, is somebody going to hack my washing machine? Really?
I can't wait for the toilet that won't flush.
Exactly.
Yeah, in contrast, I just had to buy a new microwave, and I went for the opposite. I'm like, I don't need to turn on my microwave remotely. I just don't. I don't need to spend the money. It's ridiculous. I can walk down to my kitchen. If I'm too lazy to walk down to my kitchen to press the button on the device that makes my cooking easier already, I don't deserve a kitchen.
Yeah, I totally agree with that when it comes to a microwave. However, I can't tell you the number of times I've left clothes in the washer and just forgot about them, and for hours on end. So that I think will be useful.
I think you're a squirrel, Tyler. That's the problem.
I am a squirrel. 100% I'm a squirrel. No doubt.
Preventing mildewed clothes is important.
It is.
True.
Absolutely. And then the last squirrel story here is closer to an actual, it's rodent related. Gene editing experiment turns fluffy hamsters into aggressive mutant rage monsters is the title of this article, and it's not exaggerating much. So
wow.
Basically, they're trying to understand the roles of certain hormones, specifically here it's vasopressin, and they were thinking that blocking it, I think they could increase bonding and cooperation between them, and they specifically chose Syrian hamsters, I think because their social their social organization is similar to humans, but the exact fucking opposite happens. And it's just like, like this is just peak like human.
The quote,
human thinking we're so smart. We're like, like this regulates that. Like we'll just change this, and like this is peak Jurassic Park moment here. Like,
oh my gosh, I totally agree, Adrian. The quote at the bottom of the article is the best. Quote, "We don't understand this system as well as we thought we did." End quote.
Yep. Yeah.
Once again, I think this could be a life lesson here.
Question is, what are they doing with the Psycho Rage hamsters? I would love to get a Psycho Rage hamster. That could have some fun pranks involved.
Poor hamster.
I'm going to start a fundraiser to raise funds to get Jeff Goldblum to read this article.
Oh my gosh, that would be epic.
So preoccupied with doing it. Forgot to wonder whether they should.
So here on Enterprise Security Weekly, the best stories always involve psycho rodents.
And there are photos of the hamsters rumbling as well.
They're like wrestling hamsters in here.
Well, on WWE hamsters.
And they use CRISPR to do this as well. So these aren't genetically modified like at birth animals. They're actually modifying these animals. So these animals were somewhat lovable and coexisting happily as adult hamsters, before they use CRISPR to modify their genes.
I feel bad. How would you like it if you got shot up with something and all of a sudden became a rage hamster?
Rage hamster. Just the saying makes me laugh out loud.
It's terrible. Adorable bundles of fluff turned into mutant rage monsters. I feel so bad for these poor little Syrian hamsters.
It reminds me of a book I read where they encounter some aliens that, to the human eye, look like Care Bears. Basically, like they look like a mix between small bears and the fictional Care Bears, like teddy bears. But they are extremely hostile, and just go like will murder anything that doesn't look like them.
You finished this book too? You started it and finished it?
Yeah, I mean, it's not the main point of the book. It's kind of like a side note that's like later in the series. It's the Lost Fleet, like the second series in the Lost Fleet series. Beyond the Frontier. Yeah, if anybody's really interested, Beyond the Frontier is the name of that series. It's a lot of fun. It's pretty fun. It's like a military sci-fi series. Anyway,
on that note,
true squirrel. Like we're not only talking about non-security stuff here. We've gone down a rabbit hole after the rabbit hole or the hamster hole. Here.
Maybe the previous guy can get a rage hamster to chew a hole in his blinds, so then he can now see out his window because he can't control it because of the exposed cert, the expired cert.
Should we try and combine squirrel stories in the future when we have more than one? See if we can find some way to tie them together.
Yeah, some scenario planning.
Lovely. Well, thank you, Tyler and Katie, for joining me today. It's been fun. It's been a while since we've all been together on the show.
It has. Good to see you again. I'm glad to be back, big head and all. So yeah, I'm excited. Let's do it again next week.
I can't wait. Not next week. Next week is RSA week.
Oh yeah.
But the week after that, we will be back, and we'll probably have a lot to talk about after RSA, I'm assuming.
Absolutely.
All right. Big thanks to everybody listening to this week's episode of Enterprise Security Weekly. We will be back not next week, but in 2 weeks. We'll see you then.